What's our number? I go to bed with that number. You want to make MD early, and I still have to hold your hand. I want to see it in dollars. It's pathetic otherwise.
Let's talk about finance lessons from the third episode of Industry based on my work experience on the trading floor at Goldman Sachs and at the top hedge funds in the world. Please like, comment, and subscribe, and stick around, because at the end of this video, I will grade the episode for Wall Street realism with a buy, hold, or sell rating.
I want to bang the drum this morning.
Is there any more color on Phelim's departure? It's just that 60% of the P&L feels like a pretty big iceberg to me.
Investment bank Pierpoint right here, in their morning meeting for sales and trading, is freaking out as their largest client left, who comprises 60% of their P&L, meaning profit and loss statement. Now, there's no way that a bulge bracket firm like Pierpoint or Goldman or JP Morgan or any large company in any industry would have more than 10% of revenue from a single client.
We need to be sharper at packaging trading strategies across asset classes. High margin, multi-asset plays, please. If our guys don't have conviction, it's because we're not being convincing. Simple as that.
Accurate. Confidence, meaning conviction, leads to perceived competence when selling. Now, many jobs in investment banks are sales-oriented. A lot of people don't realize that. Plus, the best entrepreneurs and CEOs are great at sales, and you can learn this skill as well. You got to know how to sell to make it in any business, including at interviews and when networking. Please see the link in the description and set up a call with me to see how I can help you.
So, we've got some mid-market offers on some corporate bonds. I would love them to be moved this morning.
Now, per this org chart, Rishi here, who is a trader, is advising the sales force, meaning these people, on selling mid-market corporate bonds, meaning debt from mid-sized companies. Now, Pierpoint makes a commission or revenue from the bid-ask spread on the trading floor when selling these to the buy side, like this hedge fund you see right here. Let me quickly explain bonds using the Ice Juice Company bond as an example from my Billions episode reviews. Now, there's two main ways to raise a lot of money using an investment bank like Pierpoint. One way is to sell ownership in your company, meaning equity like an IPO. And the other way is to get a loan like a bond, meaning a liability. This is best explained by looking at this prop, a balance sheet. Never memorize stuff in finance and accounting, always understand it because it's so much more fun this way. Now, a balance sheet tells us who owns our stuff, like this house, which is an asset on this side. On the other side of the balance sheet is who owns the house, meaning me or a bank. And a balance sheet has to balance, hence the name balance sheet, meaning the left side must equal the right side. And my house is an asset that is owned by me and the bank. Let me turn this around, this will make a lot more sense. So this yellow asset brick is the same size as liabilities plus equity. This side is who owns the asset, meaning a bank, meaning liabilities, or me, meaning equity. Now let's talk about a bond. And what I'm going to do, this will be fun, is I'm going to bring in a James Bond car from the movie Goldfinger, which actually sold for $4.6 million. Now, we want to buy this Aston Martin, but when we put this on the balance sheet, we see it doesn't balance anymore. So how can I pay for this $4.6 million asset? Well, I can issue shares on the stock market, meaning $4.6 million of equity, or what I can do is I can issue a $4.6 million bond, meaning a liability. Now, let me put a much smaller version of this here so that it actually balances. Aha, you see that? The balance sheet balances because assets are owned by banks, meaning liabilities, or people, meaning equity. Let me push this aside. Now, as a CFO at Ice Juice, I call investment bank Pierpoint and I tell the investment bank, hey, investment banker, underwrite this bond right here, underwrite it, you'll never forget now, underwrite this bond, a $4.6 million bond for me. And then what I want you to do is I want you to use your traders and salespeople on your trading floor to sell, meaning distribute this bond to your clients. Now, the debt holders almost always have a senior claim on the assets in the case of a bankruptcy. And what this means is the bondholders get their money back first before the equity, meaning the stock owners. And bonds are often issued at a discount, meaning, for example, you buy this bond for 90 bucks and it matures in 1 year at 100 bucks, which means an 11.1% yield. And this is why they're called discount bonds. How fun is that? Bonds are priced off of the yield curve, which I explained in my episode 1 review of industry. The link is in the description of this video, along with more than 30 episodes of Billions reviews. Now, since the yield curve shows the risk-free rate as it represents US government, then we know that the yield on this bond is higher because the last company, so to speak, to ever go bankrupt would be the US government. And that's why the yield on this bond is around 11% versus the risk-free rate of under 5%. We're almost done with bonds. Now, stocks often have a dividend, and for bonds, it's called a coupon. And if a bond does not have a coupon, it's called a zero coupon bond. Now, let's pretend this 1-year bond, which matures at $100 and is priced at a discount of $90, has a 5% coupon as well, just for educational purposes. And what this means is you get one coupon every 6 months of 5% annualized, or $2.50 every 6 months. And they're called coupons as people used to cut the coupons out and then cash them in at banks. Lastly, some bonds are not issued at a discount, but they have a coupon, which is again like a dividend for a stock.
I know this might sound crazy, but I think that we could play another slowdown in housing.
What's the play?
Well, obviously gold, maybe a call option.
That's vanilla. Work on a pitch, and we'll talk later.
Yeah, thank you.
So this was salesperson Harper, who works on the trading floor, pitching an idea to her boss, Eric. Now, if Eric approves, she'll call her buy-side client, like this hedge fund you see right here. Now, her investment thesis is that housing is slowing down, therefore, a flight to quality is to buy gold, meaning ticker GLD. And gold usually goes up in very uncertain financial times, like it did in the fall of 2008, when we were within 24 hours of bank machines not working. Now, a quick side note. The US dollar is also often a flight to quality as it outperformed other currencies in 2008. And fear often, but in not all cases, fear often means you buy gold or the US dollar. And Harper's boss says that the idea is vanilla, which means it's not sophisticated and it's too simplistic to pitch to a client. Now, let's quickly go to Yahoo Finance and let's type ticker GLD. And Harper mentioned buying a call option on gold, which means you buy a contract where you bet that the future price of gold is above a certain strike price. If so, you make money.
Eric, what do you want me on?
Mate, are you serious with this price?
Do you know the difference between racing green and studio green?
So this is Gus, who got demoted from an investment banker to a salesperson on the trading floor, as I explained in my review of episode 2. And you can tell he doesn't want to be there. And his boss, Eric, is belittling him, given his arrogance. Now, the culture on trading floors is much harsher than working in investment banking. And you're often not respected if you're new and if you're not making money for the firm.
Buddy, you are in my personal space. What did you study?
Literary humaniores, classics.
How did you end up in a bank? Only in England.
Now, quite often you're hazed or bullied on a trading floor if you have an attitude, especially if you're new. It's up or out career-wise.
I can't believe he's actually reading a physical copy. Mate, you just get twatted on Michael Lewis, Salomon. So he was a big deal in the 90s. Wow.
So here Robert and Gus are referring to their horrible boss Clement, who used to be Michael Lewis's drinking buddy at Salomon, which was the most prestigious bond trading firm in history. And Michael Lewis wrote a great book about this called Liar's Poker. And Michael Lewis wrote the book for the movie The Big Short, which is sort of like part 2 of Liar's Poker. See the link in the description for my reaction video on The Big Short. Now, the problem with working in sales and trading is it can be demoralizing as you're often getting paid for being a client's drinking buddy. Separately, the orange-colored newspaper he's reading is the Financial Times. It's like the Wall Street Journal, but more global. Now, I would read the Wall Street Journal and the Financial Times on the subway before I got to work at Goldman in New York City. Nowadays, I listen to this when I shower. Alexa, Wall Street Journal News.
From the Wall Street Journal.
Alexa, stop.
Truth is, nobody's going to take your ideas seriously for a few years, so just nail the small stuff, yeah?
Okay.
Accurate. When you're new on a trading floor and you're an entry-level financial analyst, you don't do high-value work. You have to prove yourself, or you might end up doing low-valued work like Yasmin here getting coffee. And when you're new on a trading floor, you answer the phones and you take messages and you do administrative work, unless you're Harper here, who's insanely smart and hungry, and she has a mentor in Eric. And you need mentors like Eric if you want to advance. So please find mentors at work and also mentor other people, because when one teaches, two learn.
What are you talking about?
I presume I should bring a bottle, right?
Yeah, no, that's great.
Okay, cool.
All right, then.
Someone should tell her they monitor those.
Yep.
Yeah.
So please, 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 don't ever date at work unless it's your soulmate, as one of you or both of you could get fired. Also, Jasmine sent that message. Big rookie mistake, as almost all messages in financial services are monitored, as we see right here.
Just an FYI, ladies. It's cute that you're living together, but keep it professional at work.
Understood. It's all right, why not again?
Now, in some hedge funds like Bridgewater, literally every conversation is recorded except for in the bathrooms.
Pitching a hedge on the housing market. The product I have the traders looking at includes a put option on the home builders index and a call option on gold, and a sweet kicker credit default swaps on the home builders too.
All right, now Harper's boss loved this pitch in the morning meeting for the sales and trading floor, and I respect that she stepped up to the plate. Now, let's talk about her trade, which will generate massive commissions and hopefully make her clients money too. Now, her thesis is that housing stocks are overvalued. So part 1 of 3 of the trade is she wants clients to buy puts, likely on the home builder ETF, which could be ticker ITB. And as you can see, the holdings of this ETF include home builders like Lennar and Toll Brothers. Now, let me explain puts. Let's click on the left side here on options. Now, options involve calls or puts. A call means you pay a relatively small amount, and if the stock or the ETF the option is based on goes up a lot in a certain amount of time, you make a lot of money. But if the stock or the ETF that the call is based on goes down, all you lose is what you paid for the call. Now, a put is the opposite, where you pay a relatively small amount of money, and then if the stock or ETF the put is based on goes down, you make a lot of money. But if it goes up, you lose just as much here. Now, this could be better than shorting a stock, because if the stock that you're short goes up a lot, you can lose a near infinite amount of money, which is why some hedge funds went bankrupt in January of 2021, when GameStop, ticker GME, went up literally almost 30 times. So here's how the put on the home builder ETF might work. Step 1. Select when the option expires. And so what I'm going to do right here is I'm going to select January 15th of 2027. Step 2, let's scroll down to puts. And step 3, let's pick a price that you expect this ETF to be well below by January of 2027, for example, $100. And there's a lot more to it. And per this Excel sheet, I teach you how to create reports and analyze more than 30 different option strategies for my clients. If you want, click on the link in the description and set up a call with me to get access to this, as I teach you everything about finance from scratch, including getting a job in finance. Now, part 2 of 3 of this trade is to buy a call option on gold, meaning ticker GLD. And if the housing market falls apart, then Harper thinks that gold will go up, which it often does in times of uncertainty, like during the financial crisis of 2008. Now, back then I was long gold, which was my biggest long, and I was short home builders like Lennar and KBH. So let's select options here, and then the same expiration date here. Then we're going to pick call option price that we think the price of gold will be well above by January of 2027. Now, let's revisit the third part of her trade.
Sweet kicker, credit default swaps on the home builders too.
So a credit default swap, also called CDS, is sort of like an insurance against a company, meaning the home builders, defaulting on their debt. And if the risk of default increases, then the credit default swap goes up a lot. And this is how Michael Burry made a fortune in the movie The Big Short.
You want to make MD early, and I still have to hold your hand.
No, that's not.
And what the were you doing taking FX in there with you?
Eric, it was a favor.
Can you tell me the yield you get out of that account versus the hours you put in?
So there is insane pressure to make money on the trading floor. As you can see, the pressure MD, meaning Managing Director Eric, is putting on VP Daria. And trading floors are territorial too, as the FX group headed by Kenny here is trying to get commissions from the same client. And Eric is ruthless when it comes to making money.
Because this isn't a social club. You're gonna spend time stroking these clueless, chinless country club Henrys. I want to see it in dollars. It's pathetic otherwise.
Whew. It's trench warfare on the trading floor. And if you don't constantly make money, another shark on the trading floor will replace you. And quite often it's somebody younger, cheaper, smarter, and hungrier. Now, watch your back and don't trust anybody in finance.
What's our number? What is our desk's budget for the year? How does nobody know that number? I go to bed with that number.
Now, fear, for better or worse, works very well in Wall Street, and these firms have to report quarterly earnings, and if they're not meeting quota, heads roll.
We owe our clients nothing. We have no fiduciary responsibility. We're advisors. We are facilitators. We can't facilitate nothing. Daria should know that.
So he's actually right. Salespeople don't manage money. They facilitate trade ideas, and they get paid commissions for it. And when you work in sales, every second you spend not selling is a waste of time. Now, in reality, he would not have insulted a VP that reports to him in front of everybody. The best managers praise in public and criticize in private. One more thing. I've worked for a lot of billionaires at hedge funds, and they are all incredibly unemotional. And to be successful in business, and especially finance, you have to be unemotional. And separately, Warren Buffett is very unemotional, and he once said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. The episode mentioned that one client is responsible for 60% of a desk P&L. That's not accurate, as no account should be more than 10%. And the episode accurately depicted how new entry-level trading floor employees like Gus, Yasmin, and Robert are not respected until they prove their worth. Lastly, although there is a lot of pressure working on trading floors, there's no way that Managing Director Eric would criticize a VP that works for him in front of the entire trading floor. Again, good managers praise in public and criticize in private. As a result, I'm going to give this episode a hold rating. Please like, comment, and subscribe, and I'll see you soon in my next reaction video to episode 4 of season 1. Thank you.